Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me this Thursday morning, my colleagues Sonia and Nigel. Guys, hi, good morning.
Good morning.
Trudging towards the end of the second week of 2023, and it already seems like a long time, right? I mean, like it has been. I mean, we've been in this new year for a while, but that's what markets do.
That's what earnings season does, actually.
It's like when you take a holiday, you come back, it's like you never left. Right?
It's a rather stretched out week when all the earnings kick in, and it's been a thick week of news flow, right?
Oh, absolutely. And earnings are just starting. TCS is the only big one which reported, but we'll kind of get on the earnings treadmill in a very fast way now. Let's just quickly set you up in terms of what you need to know as we begin another trading session. So, global cues are positive, but I should say once again, not that it has mattered the last two sessions. Global cues have not been bad. The day before, the day before that, but markets here have seen selling pressure high. I'll come to that in a bit. So in terms of global, the 10-year has fallen 6 basis points. The day before, the 10-year was up 9. It's fallen 6. So, flattish. Oil prices, I think, are the only other thing. It's moved up 3%. Brent oil now at about $83 a barrel. So that perhaps bears a little bit of watching. But overall, on the whole, with a 1.7% kind of move on the Nasdaq, 1.25% on the S&P, I mean, I would say this is supportive backdrop as we begin another session. Yesterday, and this is the problem, right? I mean, we've been kind of head-scratching, saying what's happening with the market here. All through 2022, we've been used to the market or globally doing poorly or doing well, and we outperforming. And it's been a bit of reversal as we began this year. So yesterday, the same thing happened. Initially, there was a big sell-off. The market came to within 50 points of that 17,774 level, which is the swing low which was made on the 26th of December 22. That is 17,774. We came within 50 points of that. And then the market bounced. It bounced 150 points only to see another sell-off later in the session. Broadly speaking, I mean, if the market has got to have hope of looking up and not looking down, 17,774 must hold on the downside. So that's the broad kind of support you want to, that broad and big support you want to watch as a reference point on the Nifty. On the upside, I would still say the 20-day moving average, it kind of coincides with retracement levels. I'm not getting into that, but the 20-day at about 18,121 would add confidence. I mean, you take that out, I think you perhaps are talking more gains from there. This is a short-term reversal level, closely tracked, the 20-day. Banks, we've been highlighting for the last many days, have been doing poorly, but yesterday there was a bit of outperformance which we saw, so relatively better. On the Bank Nifty, the upside level is again the 20-day moving average, which comes in at about 42,798, 42,798. Remember that. And on the downside, I mean, because yesterday was a bit of a swing kind of a day, the low from yesterday, which is 41,729, comes into play. I mean, that should hold. If that holds, I think you're in a good space, a better shape place, I should say, on the Bank Nifty as compared to what we've seen there for the last many trading sessions. So that's levels. Later, after markets close, and of course, when US markets start to trade, we get, I think, the biggest data point for this week from global markets, and that is the US consumer price inflation number. And I think, it's always been a market-moving data point for the last at least 10 months. It has a significant implication on the dollar and consequently on things like equities, etc. Hopefully, and fingers crossed, if the CPI number this time kind of corroborates what we've seen with ISM services and the wage data and the labor data, I think you're in a good place. Markets could rally, dollar could continue to sell off, and equities could come up a little bit more. And I think that's the big hope. If it's a reversal, I mean, I think we all know the markets could get into a sticky, uncomfortable kind of a place once again. But there's no way to kind of second guess this. We just have to get the data, and I think we kind of react to this when we come back tomorrow. But Sonia, apart from the global stuff, right, as we said, earnings are the other big thing.
Absolutely. And, the SGX Nifty for now is indicating that the start will be in the green, right? Up 0.3% because the global handover was positive, as you said. And there's that big CPI data to watch out for. But let's not forget that foreign investors have been selling for the last 14 days now, relentless selling from FIIs. And yesterday as well, the numbers look quite onerous. In fact, over 3,200 crores of selling from FIIs. It was not matched in step with the DII buying. So there is that trepidation. And perhaps that's the reason why the market's gains are seeing a bit of a lid on the upside. It's a very narrow range that the market is in. And, from all the levels that Prashant was discussing, the one that we are watching very closely on the downside, of course, is the 100-day moving average of 17,906. It was broken yesterday. So the next level to watch will be the December 26th low of 17,774. So that becomes a crucial support. Now, there are two numbers, the earnings that we are going to watch out for later today. That's HCL Tech and Infosys. Both come post-market. Remember, HCL Tech mid-quarter had scaled down their guidance. So a lot of it perhaps is already in the stock. But let's see what the the cues are. The commentary awaited is whether the furloughs continue into Q4 as well. From Infosys too, it's expected to underperform TCS after 2 quarters of a strong performance. So let's see what comes out from there. And then in terms of local macro data, you have the IIP and CPI data that's out at 5:30 p.m. So tomorrow we'll be reacting to both global and local macro news. I guess there'll be some tentative moves ahead of that. But this morning, the SGX Nifty is indicating that the start will be in the green. So I guess the bulls will take it from there.
Well, that's right. So now what's getting a little bit worrying is the FI selling. As you mentioned, they have been selling for the last 14 trading sessions, or they've sold close to around 20,000 crores approximately. And yesterday they sold 3,000 crores, 3,200 crores. That's the highest net sell number we saw in a single session in the last 3 months or so. So given that this year, you have interest rates higher in India, and there could be a bit of a shift to safer investments, I'll track this FI data very closely. Hopefully, in fact, it doesn't get beyond this 3,000, doesn't get worse from here on. That's about the institutional flows. The Nifty Bank, that saw a relief rally yesterday, and there was clear short covering bounce that did play out there. Nifty Bank was up more than 200 points in trade yesterday, and the open interest was down by close to around 7%. Has it found its form, or is it flash in the pan? Well, we'll know today, so we'll have to keep an eye out on that front. What do the FIs do? Well, they lighten their position, both on the long as well as on the short side, and they continue to remain net short with around 60% of their positionings on their short side. On the index options front, what's giving me hope that, in fact, the 17,800, 17,750 level can hold out in the short term is because they wrote puts very aggressively. Yesterday, they wrote close to around 50,000 put contracts, and earlier they were writing calls aggressively. Well, yesterday, some part of that got, unwound. So that's pretty good news. If things go wrong as well, there is some cushion because there has been consistent put buying. Moving to the options data, then what were they writing yesterday? It appeared the 17,800 put was very, very active out there. Premium around 25 rupees, or those put buyers actually yesterday got taken to the cleaners because at one point of time the premium went to around 75 rupees and it ended at around 25 rupees. So there is a sense of writing out there. While on the upside, 17,900 call was fairly active. The premium was around 65 rupees or thereabouts, and that's giving you a sense in terms of levels. So let's get straight to that level. 17,750 to 17,800. We have visited it more than a couple of times. So that's likely to be a strong support out there. On the upside, for today's session, because we're getting into a weekly expiry, I'll watch out for the 17,975 odd level. Once we cross that and we can trade about that level, the 17,900 call is being written in such a position that you're going to defend that level. So if you can get past that mark, then in fact we'll see a big bounce. Don't chase the morning opening. That's what's been playing out. Maybe look for an intraday dip so that 55 bump up should get sold into some point of time. Enter at lower levels. That's a suggestion, I think so.
All right, 18,006 or so is where the SGX Nifty is now trading at. We'll see with almost 50 minutes to go for the pre-open session, how that changes. Well, before we start and get any further, let me quickly tell you what is lined up here in the first hour of the show today. We get you updates from markets across the globe. Rajat Bhattacharya of Standard Chartered will join us to discuss the global setup as he sees it. Research team joins in as always with the CNBC-TV18's list of top 10 stocks to watch. And we'll also get you a fundamental stock check with Gurmeet Chadda of Complete Circle Consultants. So there is a lot lined up.
Okay, lots happening today. First up, we also have some commentary coming in from Hiren Ved of Alchemy Capital, who says he's constructive on equity markets, but he expects a consolidation phase in the near term. He says India outperformed last year in relative terms. Therefore, this year money could flow into markets like China if global markets recover. The big theme of 2023 is the opening up of China, so he expects tactical money to move there. Hiren says a lot will now depend on Q3 earnings and the budget in the near term, and he expects IT services to bottom out in the first part of 2023.
All right, Sridhar Shivaram of ENAM also weighs in. He says that he's continuing to remain cautious on Indian technology companies and expects more downgrades to come in. He says his discretionary spending gets cut ahead of a possible US recession. It could impact IT budgets and spendings further. He is of the view that be cautious on Indian equities as macros are not favorable for a bull market now. The first six months of this year look challenging according to him. He adds talks of rationalization of capital gains tax could keep the market nervous ahead of the budget.
Okay, so those are some important views coming in on the equity markets, but let's also get you some money market views now. On the rupee, Parul Mittal Sinha of Standard Chartered says the rupee swiftly moved towards 81 this week on dollar weakness and lower oil prices, while dollar buying by PSU banks limited the downside. She expects the dollar INR to trade in an 81.20 to 82.20 range next week, and the US CPI data will provide direction to the dollar. Parul expects the Indian rupee will continue to underperform global peers in 2023 on still elevated trade deficit numbers.
On bonds, this is Parul Mittal weighing again, saying that domestic yields traded lower on drop in global yields post soft US data, even as the Fed and ECB members stay biased towards more rate hikes. She expects the Indian 10-year benchmark yield to trade in a range of between 7.25 to 7.35% next week. A close watch will be kept on India and US CPI prints, which are seen easing to 5.85% and 6.4% respectively. She says the market's focus is on the budget on the 1st of Feb and the MPC then on the 8th of next month.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit. But we're looking at a whole host of stocks, namely Railtel, Shiva Cement, DB Realty, IFL Wealth, PB Fintech, ONGC, as well as Oil India. They are stocks in the back of positive news flow, while you have Concor, Nykaa, and Stovecraft. They are stocks that could be reacting to negative news flow overnight.
Okay, well, Rajat Bhattacharya has promised us with us. He's senior investment strategist at Standard Chartered. He joins us now. Rajat, good to have you with us here. If you were a betting man, would you say the CPI will confirm that inflation has peaked and markets rally? What's the probability of that happening?
Morning. Yes, Prashant, CPI has clearly peaked. We've seen the peak probably in the middle of last year, right? But the thing is that how far lower will it go? I mean, that's the key question. So tonight, obviously, you know, the consensus is expecting 6.5% on the headline and 5.7% on the core CPI. Now, any misses, and we've been seeing the downside misses for the last few months, any further misses are likely, and that's going to prop up probably the markets in the near term. But I think just the watch on CPI is not going to be enough to call the market. Basically, what we're seeing elsewhere is the slowdown, decisive slowdown in US growth. You mentioned ISM services earlier. That was a shocker, actually. The market was expecting 55, which is a pretty solid level, which was holding up. The services sector, as we know, was holding up the US economy. But it came in below 50, and that's a big shock. So that indicates that the US economy is getting closer to that recession level. And that is worrisome. And so you could see the market bounce because of any downside misses in CPI, but then the overall economic, the recession story comes into play, and you then have the earnings coming through. So we need to wait and watch for those earnings numbers very closely.
All right, so there's a decisive slowdown expected in US growth. Got that. That seems to be the common narrative. Rajat, good morning and Happy New Year to you. Let's talk a little bit about the other big narrative, right? The China reopening and the fact that foreign investors could be scrambling to put money into China, considering valuations are on the cheaper side. Do you see money moving out of India into China, or is that too simplistic an argument right now?
Good morning and Happy New Year, Sonia. And yes, I mean, scrambling is the right word. I mean, we've been talking on this platform for a few months, right? And we've been saying for last few months that we need to be in China because of the rock bottom valuations. When you talk about China versus India, clearly India was the outperformer last year. and there was scope to take money out, take some profits out of India. And that's also playing through in the market. So you mentioned FII is taking money out. That's rational. If they've made a huge profit and they're overexposed to India, they might take some money out and put into China, because China valuations are still, attractive, and it's been beaten down severely. But structurally, India remains, one of the strongest stories out there. The growth, for instance, is clearly there. China, of course, is likely to outperform in the coming quarters. We had put a growth estimate of around 5% growth for China this year, and that is being revised higher. I mean, we'll go into another meeting pretty soon, but we see that the growth expectations, I've seen credible independent houses talking about 7 to 8% growth in China this year. That's pretty solid acceleration in growth, and equity markets will probably follow. So there is tactical scope in China, but structurally the story is still bullish in India. So overall in allocations, I would say that if you're overexposed to India, the keyword is overexposed to India, then it makes sense to take profits in India and invest elsewhere in Asia. We are overall bullish on Asia, but structurally there's no reason to sell if you're just in the right sized in India.
Hi Rajat, morning. A couple of points out there. As you were saying, you believe the inflation is nearing the peak zone, I think so. But if China is going to do well, a lot of these commodity costs suddenly are going up. So, that could be a risk, right, to inflation cooling down as well.
You're right there, but the thing is, you need to see what is driving this China growth. So for the first time, I mean, the main difference in China's reacceleration this time, Nigel, is that it's going to be consumer-driven, it's domestic-driven. China has always accelerated because of investments, but this time they have a challenge in the local governments are fund-strapped. Because the property market is down, the core area where they raise funds is through land sales, but they are stuck there. So investments as a result is not going to be that significant a driver this time. It's the domestic consumption. And we've seen that, how in economic reopenings after COVID, we've seen the same story come through in India, in US, in Europe. Why not China? So China is going to play the same theme. So it's going to be consumer driven. Sure. And then the inflation's fallout is going to be probably limited. We've seen copper rise. You've seen the surge in copper, and some of the currencies that are exposed to those kind of materials like Aussie dollar has gained. But the fallout from China to the rest of the world in terms of inflation is going to be limited. It's more going to be consumer driven story in China.
All right. Just one final question. If you can, since you're an investment strategist, there is this whole theme playing out about how equities could take a backseat this year, and commodities like gold, which have been a great hedge against inflation, could perhaps come back into the forefront. Would you advise putting a larger chunk of money into gold versus equities this year?
We are neutral on gold currently, but if the dollar breaks structurally, dollar has come off from, dollar is the other one that has peaked other than US inflation. But it's testing a structural, that 200-week moving average. That's what it's testing. If it breaks lower, there'll be a structural break. And if the dollar falls and the Fed pauses at some point later this, probably sometime in the first half, then there's a story for gold for sure.
All right, we will leave it at that. Thanks a lot, Rajat. Have a great 2023. Hope to speak to you very soon. That's the word coming in from Standard Chartered, where they believe that there is a decisive slowdown in US growth that's expected later this year. Global investors may move their money out of India and into markets like China, although he is overall quite bullish on the Asian markets, despite all the volatility that we're seeing globally. Let's slip into a quick break. Our list of top stocks is lined up in just minutes from now. Well, thanks for staying with us on Bazaar Morning Call. This morning, the SGX Nifty is indicating a green start, and you have some big data coming through later in the evening. You have the IIP and CPI data in the Indian markets, CPI data in the US markets, and you have HCL Tech and Infosys that report their numbers. So lots to talk about. Our research team is here to help you prep for the day. First up, Mangalam is joining in. He has some stocks that are in the news. Mangalam, what are you tracking this morning?
Well, I'm starting with Container Corp this morning because news reports suggest that, the government is likely to invite expressions of interest for divestment this month, and we'll get some clarity on that. Of course, while this is positive news, remember yesterday towards dying hours of trade, we did get their volume growth number as well. It was a 5.2% volume growth year on year. There was a decline, quarter on quarter. The domestic volumes, while they grew about 24%, the EXIM volumes grew just about 0.6%. And that may put a lid on the gains that the stock may see today, because Macquarie says that it indicates further market share loss for Container Corp, and divestment, while that will be a key trigger for the company going forward, they do have an underperform rating on the counter with a 620 rupee stock share price target. We have Railtel as well. They won a couple of orders, 170 crore order coming in from the government of Puducherry and 123 crore order coming in from NMDC as well for the IT infra implementation. The third stock that I'm watching out for is Nykaa, and this is on account of a Bloomberg report which says that institutions are looking to sell $26 million worth shares at about 148 rupees a piece, which is a discount to the current market price, but we don't know much details about this, as this is the only line that we have from the Bloomberg report.
All right, Mangalam, thanks very much for that. But more stocks with news flow. Sonal is standing by with that list. Sonal, hi, good morning.
Good morning, Prashant. Let me start with Shiva Cement because the company has received consent to operate, and this has come in from State Pollution Control Board in Odisha. And this is for starting a 0.66 tons per annum clinker and 9 megawatt waste heat recovery plant as well. So that stock remains in focus. We have DB Realty because the company and their wholly owned subsidiary, they have executed settlement agreements with Reliance Commercial Finance Limited. So the company, that is DB Realty, has agreed to pay 185 crore rupees. That is as a full and final settlement to the lender, and their wholly owned subsidiary has agreed to pay 214 crores as full and final settlement. This will be paid in tranches, with the last tranche to be paid by 31st March 2025. Stovecraft in focus because there is a resignation coming in from the Chief Executive Officer and whole-time Director, Mr. Rajiv Nitin Mehta. IIFL Wealth will be in focus as well because they have a board meet which is on the 19th to consider declaration of fourth interim dividend for the financial year 22-23 to the equity shareholders, and also they will be announcing stock split and a bonus together. PB Fintech also on our radar today because RBI has granted in principle approval for setting up the business of account aggregator to PB Financial Account Aggregators Private Limited. So that is a positive news for the company as well.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Manisha. She's joining us to tell us about the spike that we have seen in crude oil prices. Morning, Manisha.
Morning, Nigel. Well, yes, 3% of a gain overnight, and we were trading at almost $83 per barrel, and this is after we hit a low of $77 in the previous week there. Well, there is improved global economic outlook and consequently higher demand for crude. That really seems to be supporting the markets right now. It also has to do with the fall in dollar index, which is just about holding 103 right now, and the strong China demand estimates is what the markets are working with. And even as you have seen the U.S. crude inventories gain up by nearly 19 million barrels, which is the highest since Feb 2021. Markets do believe that since you've seen a hike in crude inventories, there is a decline in the crude petroleum inventories, and this is because of the winters, frozen pipes, etc., and that's led to lesser output of petroleum products, and that in turn also seems to be supporting the crude oil prices.
All right, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow. There's Railtel Corporation, there's Shiva Cement, there's DB Realty, IIFL Wealth, PB Fintech, ONGC and Oil India. While stocks with negative news flow, there's Concor, Nykaa and Stovecraft. Let's take a quick break. On the other side of the break, Gurmeet Chadda of Complete Circle will be joining in for some fundamental stock analysis. We will also speak to the management of Kalyani Steel, Mr. R.K. Goyal, to discuss the key trends in the steel sector post the reopening of China. Stay with us. Welcome back. Well, let's get our first guest on board. We have Gurmeet Chadda of Complete Circle Consultants to join in to give us a list of stocks that he's looking at and of course what to expect from the big Qs that are lined up. Gurmeet, good morning. Later this evening we have both Infy and HCL Tech reporting numbers, and the fear is that Infy could talk about higher furloughs this time, as HCL Tech did mid-quarter. What do you do with these names if they are in your core portfolio?
Sonia, I think a lot of concerns are in the price, and the way IT has performed entire FY22. We also saw with TCS that the results weren't as bad as even the commentary I found was I would not say very optimistic, but they gave a very detailed commentary, even vertical wise. Infosys, I would look for they highlighted some weakness in BFSI, especially in the mortgage sector, bit weakness in retail and high tech. So I want to see, because BFSI contributes a third in terms of verticals. Also, Europe contribution is about 25-30% for these two biggies. So that's something we'll have to look out for. But I, in general, feel that IT spend is more structural, and 1 or 2 quarters slowdown doesn't really change the long-term story. Infosys remains a portfolio stock. There was some absence of large deal wins in terms of any updates we got. So I think that's something I would like to monitor. But as I said, they are doing well. Valuations are a little more reasonable now. Their cloud revenue last quarter was almost $1 billion, of $4.6 billion they did. So led by Cobalt. So I'm not really too pessimistic at these prices. HCL again, trades at about 16 times now. So some of it is in the price, in my view. You may have another quarter of some softness, but it doesn't change the long-term outlook.
Good morning, Gurmeet. Let me paint a beautiful picture for you. CPI number comes. Expectation is core CPI will grow 0.3% month on month. It comes minus 1% month on month. You get dollar is lower, equities are higher, rates are under control, and suddenly inflation seems like a very 2022 problem. I know it's too much to ask, but just a question on the market, Gurmeet. How are things looking? This seems to be, and I put this data out yesterday, the first 10 days of 23, most local other markets are getting money. Regional markets are getting money, but here there is a bit of outflow. $1 billion, actually more than $1 billion, $1.5 billion or so. Is this just some kind of tactical near-term reallocation, according to you? What is going on?
So Prashant, I think some bit of tactical reallocation. I think the pace of selling is not a little bit; it's much higher. 12,000 crores in first 10 days is serious selling. Also, I think if you see the FI holding the top 3-4 stocks, and especially the weightage on financials and IT for FIs is very high. Financials is 50%, IT is the second one. And top 3-4 stocks probably make 40-50% of the investments as far as Nifty 50 is concerned. So some of it is tactical, with money moving to even the bond. The 2-year bond has been 4.5% plus, and some maybe due to China reopening. There is also some, I was speaking to some friends. I don't want to do any rumor mongering, but there's some also fear of this LTCG rationalization also. While the flows, the quantum may not justify that. I mean, there's some rumor of 20% coming across asset classes, right? Currently it's different. So I don't know. There's too many stories around that. And the dollar index is showing something else. Rupee is done. So it's a bit of a mixed picture in my view. But I'm not reading too much into that. I think the domestic flows continues to be strong. And there's a lot of liquidity. I speak to a lot of family offices, a lot of, ultra HNIs. There's a lot of liquidity on the sidelines. So my sense is there'll also be some flow if you see more, another maybe 5-10% correction in the market.
All right. Hi, Gurmeet. Good morning. Gurmeet, Bajaj Finance, Bajaj Finserv, they have been the big wealth creators. Now, post that quarterly update that did come about, the stock has seen quite a sharp correction. They're growing, but as we have been saying, when at the top ranker in the class, you're expected to continue, beating by a big margin. What's your sense in the stock? It's come off the 52-week high.
Nigel, similar story playing out like with HDFC and Kotak, right? Which happened for 2-3 years. If you command, so Bajaj was 8-9 book value. And at one point of time at $8,000, it was almost 10 price to book. If you command that kind of a multiple, any miss, I would not say last quarterly update was a miss, but it was a normal growth, right? With quarter-on-quarter growth being slightly lower, while year-on-year growth was still around almost 27-28% on assets. then and despite this correction, it's still 5.5, 6 value. So interest rates are like, they have a gravitational pull on valuations. So anything which is high valued, and if the growth slows down, we saw that with Tata Elxsi, again, unrelated example, how it fell from 11,000 to 6,000, when it stopped growing 8% quarter on quarter and came down to 5% quarter on quarter. So I think this will play out. I mean, we have to be more reasonable on valuations. But as I said, Bajaj has always come back after, large drawdowns we have seen. I think they're still at about 2.3, 2.4 lakh crore asset base. Their margins are best. Their NIMs are at about 11%. Their cost of funds is sub 7%. And they continue to grow at a very healthy pace, much ahead. And in terms of much better asset quality, and housing now, it makes a significant portion of their overall lending mix, which improves, any further extension in credit costs, etc. So, remains on our leverage, remains a portfolio stock for us. I'm more keen on something like Poonawalla Fincorp, where we've seen, that kind of growth can come with just about 18,000 crores of assets. Mr. Poonawalla talking of 50,000 crore assets in next 2-3 years, which is a very sharp growth. They got AAA rated months back. So now their cost of funds is almost same as Bajaj Finance, 6.9%, flush with liquidity. I'm seeing a good digital ecosystem getting built. They're getting rid of the legacy book they had when they acquired Magna Fincorp. So that's something which is more in terms of, me being tempted to look at. But Bajaj Finance, we continue to remain invested for long term.
Okay, all right, interesting. Poona Fin as well, Poonawalla Fincorp, and continue to remain invested in Bajaj Finance. Gurmeet, request you to hang on. The metal stock, it's been catching everyone's attention, so let's focus on that. This after China's reopening, well, it's been a big driver for steel companies. JP Morgan, they came out with the note. They said that the demand environment is good. It's expected to improve post the Chinese New Year, and also price hikes are likely to come about in the next few months. To discuss the price and demand situation on the ground, we're joined by Mr. R.K. Goel, the MD at Kalyani Steel. Good morning, Mr. Goel. Thanks so much for joining in. And first time we're speaking in 2023, so, wishing you a good year ahead. Well, sir, let's take stock first in terms of pricing. For a company like you all basically cater to the auto industry, and you all fix prices on a quarterly basis. So my question to you on pricing is, what was the change in pricing, in quarter 3 in comparison to quarter 2? Have you got that revision? And now I'm guessing you will be trying to push through a price hike. So you'll be in discussion with the OEMs. Give us a couple of details out there.
Yeah, good morning. We had a price decrease of around 4,750 in Q2 as compared to Q1. Wherein the Q1 we did get some hike, but it was much lower as compared to the cost increase. In Q3, there was a demand from the industry for price decrease, even though we were under tremendous pressure of cost increase as well as cost increase due to devaluation of the rupee. They are still demanding that. At the same time, costs are continuously increasing. You are aware that coking coal prices have gone up, iron ore prices have gone up, and with China opening, prices of all other raw materials will go up. Now, there is another which is less talked is the cost of ferroalloys. The cost of nickel has gone up substantially, moly has gone up, and same is for the ferrochrome. Coupled with the depreciation of rupee, there is a tremendous pressure of cost, and at the same time, OEs have a thinking that we should reduce the price. So we are in a very tough situation currently, and it definitely has a big impact on our realization.
Right.
Margin.
Mr. Goel, we are taking the cost pressures on board, and the weaker rupee as well is hurting you a little bit. But give us a few numbers. Quarter 1, there was a bit of a price increase. Quarter 2, there was a pullback of around 4,700 rupees. Quarter 3, there was a demand for price decrease. But what was it? What is the the conclusion ultimately? What is your demand? What have you got? Or are you still in discussions for quarter 3? And what is the outlook for quarter 4?
Actually, we are still in discussions for quarter 3. As far as we are concerned, there is no question of giving any price decrease. As such, we are under tremendous pressure. And Q4, again, we would like to have a price increase. And we have already requested some of the OEs for a price increase. Let's see where we settle. Quarter 3 is unsettled. Q4, we need price increase. And we are still in discussions with the OEs.
Okay, this is important, Mr. Goyal. You're saying that there's a big impact that you're expecting on realizations. It's a very tough situation currently. So since you're looking for a price increase, can you give us any indication of how much is the price increase that you can pass on?
Actually, our cost increase is around 6,000 rupees per metric ton. Now, we are looking for at least for this 6,000 rupees. And that's what we would like OEs to compensate. Now, this 6,000 rupees is basically the cost increase on account of direct raw material price. But look at the way overall cost structure has gone up. In the process, the working capital requirement has gone up by almost 80 to 100% in last 1 year, 1.5 years, coupled with the 3 to 4% increase in interest rates. So this has also impacted us substantially by way of financial cost on our working capital. One is the amount.
Sure, this 6,000 rupees you're asking for, or you're hoping that the OEMs will compensate, but this is at a time when the OEMs themselves have so many rising costs, right? Whether it's regulatory costs, whether it's new safety norms, emission norms will be kicking in from April. Do you think you will get this kind of compensation? And if not, what would the impact be on your margins, which in any case have now dwindled to about 10%?
You are absolutely right. You see, on one hand, our costs have gone up, so we have to demand for it. And at the same time, what you are saying is correct. That's the situation of the auto industry. But whatever cost increase, we would like to get it. And if it is not, if we do not get it, then definitely there is a big impact on our profitability.
Okay, all right. Mr. Goyal, for Q3, what could be the best and the worst case outcome? Will you be happy if you at least go away with no price change after the 4,700 rupees price cut in Q2?
You see, what we are expecting a rollover. That means no decrease, no change.
No decrease. Got it.
Yeah.
All right. Quick word on demand. Demand strong, right? You're functioning at optimum utilization levels. You're continuing at that?
Yes, we are definitely doing that. And now we have for avenues to export so that we can still hope for better realization.
Okay. And export is how much of your mix as of now? It's very small, right?
As of now, it is negligible, but now we have started trying. We were not trying because our capacity is fully booked from the domestic market, which is still. But then to improve our realization, maybe we have to look at this option also.
Okay. Can you tell us a little bit about the PLI scheme? What is the capex that what is the amount that you will be investing, and how much will this take your capacity to?
You see, as far as the PLI scheme is concerned, 2 of our products are approved for PLI, and in total minimum investment required is around 210 crore. And we have to increase the production of these products by 80,000 tons each. And the growth in the sales has to be minimum 15% year on year. So I'm pretty hopeful we may achieve, but it's a tough call.
All right, Mr. Goyal, so you'll be putting 200 crores, 80,000 tons in, and I think you're approved in 2 categories, alloy steel for bearing steel as well as for automotive powertrain steel as well. You said 15% revenue growth, but on what? You'll be putting 200 crores. What is the minimum revenue first you have to deliver?
You see, from the baseline, in each of the product category, 15% incremental sales.
Yes.
Incremental. So that is what is the requirement. And in each of the category, we have to invest minimum 105 crore.
Okay, 105 crore. All right. And by when will these revenues start reflecting? Which year?
It will take time because all this investment, by the time it starts yielding result, will take around 2 years' time.
Okay, so it's still some distance away, and I'm guessing that this entire capex will be funded easily via your own balance, because I think you're sitting on a net cash of close to around 500 crores.
More than that.
How much is it?
It is more than that, yeah.
Approximately, sir, how much? Net cash in your books?
A free cash of more than 900 crore.
All right, I think that's the gross number, but we'll take that point on board. Maybe post your numbers. We'll have a better chat on that front. Thanks so much for joining in, Mr. Goyal, and giving us those details. Well, Gurmeet Chadda has been waiting by as well. Gurmeet, you heard that chat we had with the management of Kalyani Steel. What's your take on this metal space? Normally, you'll stick to quality, and metals is something that normally you're not very positive on, or you don't have a longer term view. But as of now, with the reopening of China, anything you like from that space?
So, Najib, we track this space because a lot of our clients are into forging, auto ancillaries, and etc. So, while Kalyani is into mainly the consumer is forging, and they make, for automobiles, they make camshafts, rods, gear transmission. They also make round shots for tube industry. So we track it. One thing which I like now more because we are on the fundamental side is the management. Is the turnaround which we have seen in a small company which is related to Kalyani is Mukund. In fact, they share a common facility. The product profile obviously is slightly different. And so last 2 years, debt reduction of almost 2,000 crores. So from 3,500 crores, they are at 1,500 crores right now. Also, a lot of existing interest rates and the facilities have been refinanced at a lower rate from 13% to almost 8.5%, 9%. So that's over 100 crores plus of interest cost savings alone. And then there is an operational performance improvement with top line now this year expected to be around 6,000 crores. Also, if you see they do the top end quality products. They have this tie-up with Sumitomo, which is a rolling mill where you make very top-notch, alloy steel, which a lot of it is also exported. So what you need to see in these spaces is whether your order book continuously remains full or not. So if the demand is good, environment is good, you make top quality ones. And if the demand environment is weak and there's pricing pressure, you shift to a slightly, I would not say a second grade, I would say products. So that fungibility and your ability in terms of making products is extremely important. And it's not as generalized a trade as it looks like. So we are tracking Mukund closely. It's a small company, 1,900 crore kind of a market cap. And there is a both financial and operating leverage expected over the next 12 to 18 months.
Okay, I do want your thoughts also on this entire EV ecosystem because there's so much happening here. I'll come to that in a bit, Gurmeet, but in the meantime, let's get a quick, view in. After 3-year hiatus, the Auto Expo kicked off in the capital yesterday. Tata Motors showcased 12 cars, including 5 electric models, 14 trucks, and including those that were powered by hydrogen fuel cells. So the big narrative really was getting into newer technology and staying ahead of the times. Tata Motors, Ashok Leyland, all looking at hydrogen, electric, CNG. My colleague Parikshit Luthra exclusively spoke to Tata Sons chairman N. Chandrasekaran on the sidelines of the Auto Expo. Listen in and we'll come back.
We are investing both in ICE technology as well as in electric vehicles. See, we had a lot of product gaps which we have been trying to address. So it's a question of focusing on safety. It's a question of taking a bet on electric mobility. That's a bet we took in 2018, late 18 and 19. I think we need to do all ranges. It's not only about price range at 10 lakhs. We also have to have higher end models because customers have different choices. There are different segments of customers. So we need to continue to work on batteries. I need to work on new technologies. Currently we are with lithium ion and we need to look at other technologies as well.
Okay, the buzzword was clearly new technologies at the Auto Expo yesterday. Before we slip into a break, let me tell you what's lined up in the next half an hour of the show. We'll bring you the top stock picks for the day from our technical and F&O experts. That comes up in just moments from now. Later, we will decode the stock rally in our Momentumizer segment. And before the market opens in CNBC-TV18 Stocks Board, we will highlight the top stocks to focus on for the day. Stay tuned.
All right, welcome back. Just going into the pre-open session, 10 minutes out. Anuj is here in the studios to run us through what he's making of things. Anuj, last couple of days, selling at high levels.
Yes, Prashant, good morning. Of course, there are two very important cues today. First is that it's weekly options expiry. And of course, the all-important US inflation data comes in today. Now, the issue with the US inflation data is that almost everyone now believes that it's headed downward. The trajectory is downward. And has the market fully priced that in? Because the Nasdaq is actually up 9% from the recent Jan lows. 9% is not a small rally for an index like Nasdaq. And Nasdaq is most positively correlated to the inflation print. And if you see the bond yields as well, it's clearly indicating that the market believes that inflation is headed lower. So can there be sell-on news after today's number? Who knows? Let's find out. The other thing is that institutions are net sellers in India. I mean, if you see FIs minus DIIs, and East Asian markets are showing clear signs of outperformance. Our market rallies are mostly on short covering. There's no physical cash buying that you're seeing, and Nifty is repeatedly testing 17,800 levels. Though the Bank Nifty showed some respite yesterday. I think today's trade is about the 18,000 call writer being expiry. Its open interest is 1.45 crore shares, and if you add the premium, Nifty's 10-day exponential moving average placed at 18,022. So my sense is that that will be the resistance. You really need to cross it and close above that to force further short covering. And the 20-day exponential moving average is 18.25. Like we've been saying ad nauseum, the downward support is 17,774, which is the December low. And the Bank Nifty yesterday gave some respite, but some very important resistances are placed over the next few 100 or 200 points. 42,400 to 42,500. The 50-day moving average 42,400, 10-day exponential moving average 42,550, and 20-day exponential moving average 42,700. My sense is today maybe the Bank Nifty could struggle at higher levels.
Okay, perhaps some caution in the system. Lots of big data coming through later in the evening, so the market would want to wait and watch. Thanks a lot, Anuj, for that. Sudarshan Sukhani and Mitesh Thakkar are with us. Sudarshan, good morning. That's the big question, right? Will the December low of 17,700 break eventually through the course of the next few weeks? What's your best guess?
Good morning, Sonia. I don't have a guess. We'll just follow the market. If 17,800 breaks, then that tells us that much more downside is coming. But that's a separate issue, because today that level should hold. We've had 2 days of gains in the US markets, broadly cheerful markets almost everywhere except India. I think we had a very narrow range yesterday. The bears did not succeed in pushing the Nifty down. They did succeed in holding it. So after that narrow range, and the fact that there is some optimism all around, today's trade is only on the long side of the market. You buy if the Nifty crosses yesterday's high of 17,980, keep a 100-point stop, and then count your luck.
Okay, all right. Sudarshan got that. Mitesh, what about you? We defended lower levels yesterday. What's your sense today?
Good morning, Nigel. So I think we've been doing that for the last few days. Look back at the last 2 weeks of history, and 17,800 I think has been tested on about 4 or 5 occasions on intraday basis, and managed to and the markets have managed to hold about that. But I think on the upside, we still need a breakout to confirm that there is some kind of bottom formation happening. So till we cross 18,150, I don't think I'll be aggressively long. But in case we start breaking below 17,800 zones, then I think aggressive shorting opportunity could arise. And my initial belief is that there's a stronger chance of that happening. With the Bank Nifty also looking slightly corrective, I think the odds are that eventually in the next couple of days, we might get a level below 17,800. But till then, I think, trading is more of stock specific basis, or try to short closer to about 18,150 on the Nifty.
All right, got that. So that's the setup as both Mitesh and Sudarshan see it. Gentlemen, good morning. In terms of specific trade setup, stocks, Sudarshan, what do you have?
Well, I have Emphasis, which is a buying opportunity. It's made a sideways range that also looks like a bullish head and shoulder. That's a good pattern to trade in. Remember, most of the buys are positional buys. Or today, it is not possible to say that, okay, intraday, in the next 2 hours, these stocks will go up. How would I know that? But Emphasis is a buy if you are looking for a positional trade with a stop under 1975. Siemens is another buy. Similar pattern. It has made higher lows while the Nifty has made lower lows. It's outperforming the market. There is some sense that it is breaking out from a small trading range. Keep a stop under 28.50. Jubilant Foods is my only intraday short. If you see the charts, it's a steady, one-sided move all the way down. That's an intraday short with a stop above 498. And finally, MCX is an attempt to buy a dip. This is not like Siemens or even Emphasis. It is, we are trying to see whether we can buy this deep correction. We may not succeed. Keep a stop under 1456 and make that attempt.
How about you? What would your buy and sell calls be for the day?
I have more of buy calls today, Sonia. A couple of metal names on the list. Hindustan Copper is a buy with a stop at 122. I would look for targets around 135, 136 to begin with, and eventually higher levels here. The other name is Hindalco. The stock made a fresh swing high. Also had a gap up yesterday. So that's a buy with a stop below 480 for targets of 510. And Siemens is the third buy call, which I would recommend buying with a stop below 2905 for targets of around 3010 on the upside. One voluntary sell call, that's on Cipla. Some kind of price breakdown has happened over here, and we could see further declines. So targets of around 1,010 is what I'm looking for, and a short trade can be done with a stop just above 1,067.
Got that, Mitesh. While talking about Cipla and pharma stocks, I'll tell you what, we'll slip into a short break. We come back, we'll get you pre-opening. We'll also get chatting with Cinderella Carvalho of JM Financial to talk about demand trends in the pharma sector. Stay with us.